We are live. Good morning, everybody. Welcome to the morning show. This is Stock Market TV. Spencer, JC, Steve, Alfonso, whipping up charts for us. Got to talk about China today. Yesterday's price action was just brutal. We'll talk about that. We'll talk about a trade that JC and Sean put on yesterday. And our guest is Rob Koyfman from Koyfin Charts. So we'll talk to Rob about when he's watching. Good morning, chat. Thank you all for being here. Smash the like for me, please. Let's go.
Hey now. Happy Wednesday. I'm only one more show before the big portfolio accelerator next week.
Thursday, but it stays Thursday, but nice try.
Oh, so after today, one more show.
Yes. We are doing a show on Monday. I mean
Thursday.
Wait.
Yeah, everyone's traveling.
Today is still Thursday. Tomorrow is still Friday. Portfolio accelerator.
No, portfolio accelerator is Monday, Tuesday, Wednesday. No show. If you're either there with us in New York or you're not. You are either in or you are out.
All right.
And lucky for you that we'll get to hang out with us.
Miscommunication then. I didn't realize we weren't doing a show on Monday.
Then you are out. No. No, I'm stoked. I'm stoked for next week. Super stoked.
I'm going to be in Connecticut Sunday and Monday, so I was going to have to miss it anyway.
Okay.
People are asking questions
About
JC.
What kind of questions?
Mostly
Chinese questions?
Everybody wants to know about this mystery dinner.
There's nothing mysterious about it. If you're cool enough to receive an invite, you will be there with us. And if you're not that cool, you will not. That's just it's just what it is, but it's all good. By the way, I didn't send in the wine. I called her. I didn't get the wine list. She breaking balls or no?
I sent it to you.
No, I know you sent me it, but I haven't actually placed the order.
No. That's not how it works. They don't want. They said that it's better for you to just order wine there.
Oh, perfect! That gives me one less thing to have to worry about. I was very concerned that I hadn't ordered the wine yet. I don't even have to do this. This is fantastic.
No, I mean, I guess if you want to reply to her, it couldn't hurt. But
nope, I'm good.
All right.
Let's go. Hit it, baby.
Maybe I shouldn't have said that.
All right. Oh, that's fantastic news. It was hard to pick the wine. It's very French.
All right, let's talk about the markets.
All right. All right. I think it's important to start out with the NASDAQ futures large and in charge today. NASDAQ futures up almost a full percent today. S&P futures up 50 basis points, 0.5%. Dow futures are flat. Bond futures are flat. Gold is flat. Silver flat. Copper flat. Oil flat. The only thing moving is the NASDAQ and the S&P 500. Everything else is pretty much flat. Of course, natural gas is down, making new widows every day. And the dollar mixed. Big reversal in the Mexican peso yesterday. Big reversal. British pound, big reversal. That's it, guys. That is front and center. What is happening in the U.S. dollar is the big driver of what's happening in risk assets. So let's get into some funny money quickly. Bitcoin down 300 points, 42,500. Ethereum pretty much flat on the day, just a little bit above 2,500. And, of course, Solana hanging out there near that $100 level. By the way, total crypto market cap down 15 billion this morning. No big deal. 1.62 trillion in crypto market cap. And if I may, Ethereum, Bitcoin, that ripper 25-30% move that we saw last week, hanging in there and consolidating those gains pretty well. So very impressive there.
Some altcoin weakness this morning, slight weakness. And Apple, interestingly enough, up here pre-market, up over 2%. Not enough to move the Dow. Somebody's got to go wake up the Dow, let them know stocks are rallying here this morning.
Somebody needs to calculate what's actually in the Dow Jones Industrial Average,
Well,
because
UNH is down 4%. I
if you
understand.
if you took the time to go and see what is moving the Dow, Apple's not even a top 10 component in the Dow Jones Industrial Average, but it's a big component in the Nasdaq. And what do you know? Nasdaq's up almost 1%, right? No? See? No?
Yeah, I'm seeing a lot of green on the screen here in the NASDAQ this morning. AMD just doesn't stop. And this AMD stock has just been so hot.
Nvidia, right? Nvidia up another 2.5% this morning.
Yep. Nvidia already at new highs. AMD gunning right through its 2021 highs this morning. I mean, I'm just looking at the top movers here, and this is nothing really new on a big update, but it's just littered with, it's all semiconductors in the NASDAQ. MCHP, AMD, Marvel, ADI, AMAT, KLAC, NXPI, NVIDIA. A lot of stuff up over 2% here this morning, and it's all semis. So never a bad thing to see a market rally led by the semiconductors.
Well, Apple's not a semi, right? And what do you make of this? What do you make of these? Did you say not yet?
Not yet. Yeah.
It's hilarious. What do you make of these currency moves yesterday?
Is this a Taiwan semi thing? Is this
what a
all?
Taiwan-
Is this all just sympathy?
Well, normally I would
Taiwan
say yes, but with the way that these stocks have been going of late,
yeah, it's a trend thing.
yeah,
Yeah.
it's probably a mixture of both. But
Cool.
yeah, this morning is not hurting. That's for sure.
Are we buying? Are we buying TSM above 110? First of all, why don't you tell me what happened? Why is Taiwan semi up so much?
I'd be
Big
glad
beat.
to tell you.
Big beat.
Let me guess. Spencer's like, I thought you'd never ask.
Any chance I can get to run that bumper, I will do it. Yeah, a sizable beat this morning for the earnings per share and for the sales and for the guidance. They were talking, let's see, what are they seeing here? They see, I guess the guidance was good, but it wasn't like knock your socks off good or anything, but it was still good. They talked about their global expansion plans for this year and beyond. But it was a beat across the board here. A dividend increase as well in whatever currency that is, I guess. So they're increasing their dividend from 3 whatever currency to is it? I'm not sure what that is. NT to 350 a share. So, and yeah, so good news for Taiwan Semi across the board. What's the Taiwanese currency? What is that? Do we know?
The Taiwan dollar.
Taiwan dollar?
TWD.
Oh, okay. Taiwan dollar.
But so more importantly than any of that stuff.
And my answer to your question is no, I'm not buying this.
The look at all that support in 21, turned into resistance last year. Here we are back again above 110. You're not long.
You know how I feel.
I
these
don't know
things.
why you feel that way. What's your beef with this?
This
thing
is like
above
the
110?
highest quality, lowest beta you're gonna get in this group of very high beta stocks.
That's fair.
You know,
That's fair.
and just chart it relative to their peers. Doesn't excite me. Chart it relative to anything.
Yeah.
Won't excite you.
No, that's fair. That's fair. I get it. It's beneath your line.
Yeah.
Yeah. No, I get it. That makes sense. What about you, Spencer? You like things that are boring and slow. You like this?
This is certainly not below my line.
They pay a dividend.
It's not a SPAC.
No. I mean, why wouldn't you be interested in? Look,
You just said why. That makes perfect sense.
Okay, but Strazza talks all the time in fishing in the right ponds. Yeah, is this not the pond to fish in?
Right pond, wrong fish, bro.
Yeah, wrong country, bro. This is America.
Not wrong fish this morning. So
it's like
this,
catfish.
This is America.
I don't know. Not the wrong
fish. This one back.
We eat fried chicken and apple pie. Right? This is Taiwan.
Interesting though, right? With that weakness out of Asia, yesterday and the day before. Yesterday was a historic day in the Hang Seng.
So can you tell me? So every single stock in the Hang Seng was down. Is that right?
Yeah.
How's that?
Yeah.
How many stocks are in the Hang Seng?
Thousands.
And every single one was down? That can't be right.
They were all down.
It wasn't some random utility stock that was up or something?
I'm relying on Sentiment Trader, and I saw it reported in other places. I don't have this data.
You don't have the Hang Seng internals handy?
I could get it.
We might have to do something about that.
But that's pretty wild, right? Talk about a synchronous sell-off, everything moving to the downside together. Hang Seng looks terrible. I know you were tweeting it yesterday. The Shanghai looks even worse. And then Taiwan Semi, one of the biggest, maybe the biggest, most important name in Asia, comes out, boom, smashes earnings.
Throw up slide 4, Spencer. We're moving on to China.
China.
Moving on. Taiwan is doing one thing, China's doing another. Look at that. So if anybody's ever wondered, that FXI looks just like the Hang Seng Index. Does it not?
Totally.
Totally.
What index does the FXI? Doesn't matter. Doesn't matter.
It's the iShares China Large Cap ETF, which it used to be like the Xinhua 25 or something like that. But don't worry about any of that. It moves with the Hang Seng.
Yeah.
What's amazing,
as you can see here, right?
What's amazing is that you've heard so much about Chinese equities and the China's stock market my entire career and how that's the place to be. People don't say that anymore, but they used to. Trust me, this thing's never done anything. Never done anything.
Well,
and Strazza has some opinions after his exploits in Hong Kong, right? Very hush, down low, whisper.
I don't let him, cloud my investing brain.
Sean and Strazza were very emotional coming back from that Hong Kong visit. They were it was very impactful, right?
Yeah, we had a good time. We learned a lot. Met some really, really cool new friends.
But to Steve's point about people talking about China all the time, it's because under the surface, there have been massive winners over short periods of time. Yeah.
Mm-hmm.
You agree? So it's not like, FXI looks bad, but K-Web has had periods of outperformance.
It has. There's a time and a place. What is that noise? Turn that shit off. What is this, amateur hour? This isn't Benzinga, Spencer.
I think it's me.
Dude, what's the matter with you? How many times have you done this that you can't even turn this shit off? Sounds terrible.
I don't hear anything. Chad, do you
don't
hear
either? I'm trying to figure out what.
Yeah, turn it off.
All right.
I don't know what noise.
It's the Slack. Strazza has his Slack on. Are you new to this technology thing? They don't teach you that in Connecticut? How to turn your shit off when you're on video?
Yeah.
They don't teach you that? Too busy listening, too busy watching women's basketball?
UConn, big win last night.
Watching women's basketball and playing bad golf?
UConn, still number 1.
Why do people in Connecticut love golf so much? It's not like it's Florida or Arizona. It's Connecticut. What's that all about? Is it like just a country club vibe?
I could just say because they got money.
Not really. It's very bifurcated. You got a lot of money in the Southwest, and there's a lot of poor folk in the rest of the state. Isn't that not true?
Golf wasn't a huge thing when I was growing up. It really wasn't.
Like everybody I went to college with is from Connecticut. They're all amazing golfers, rich or poor.
It's a bigger thing, I think, down south for sure.
All right. So what do we make about China then? Finally, just keep it off. Just nothing. We're good. Nothing to do there.
Throw up the Shanghai.
Because I saw people. There are people talking about China that have never talked about China. There are people tweeting out about the Hang Seng that can't spell Hang Seng. My thought here is that word's gotten out. So I'm not going to be short. Am I?
But you're looking for an entry. Did I get that right?
I'm not looking for one.
Okay.
Listen, it seemed like
I agree. I actually agree with you.
It seemed we talked about this on Hot Corner yesterday. It seemed like if you asked me a few weeks ago with what the rest of the world was doing, we're seeing this broadening participation around the world, global equity markets. If you ask me, okay, is China gonna, break these lows, or is it gonna rebound and catch higher with everything else that's working? I said, yeah, it's gonna rebound for sure. But instead, what we're starting to see is the winners, the leaders, internationally, break lower. Seeing a lot of failed breakouts in Europe, whether it's the DAX or the Euro stocks, right? Stuff like this, they're catching lower to China rather than China playing catch up to them. So, can this be a scoop and score? We'll come back here next week and say, hey, sweet. Yeah.
I got a chart. Claims to be Irish, but I think we know that it is not. Throw up slide 2 there, Spencer.
Is this HSBC? No. Okay.
Nope.
Claims to be Irish.
That's a currency in Mexico. That's not it.
Uh,
It is slide 2. It would be a new slide 2, apparently.
Wait, what? Not this.
Not the Mexican peso. No, that is not what we're describing here in China. Thank you very much. This is Pin Duo or Pin Dao,
It's
as
PDD.
as Strazza likes to call it.
It is officially PDD.
It is officially PDD Holdings.
That yes.
True, it is. That doesn't mean we need to give the profits back, and it doesn't mean that we haven't hit our target yet. We still got room. Strazza, have you figured out why this company claims to be Irish? When we all know it is not.
they're not Irish.
They're not Irish. They don't look Irish. They don't drink as much as the Irish.
They just want to be anything but Chinese. I'm close to getting stopped out of this. I got stopped out of Tattle.
How tight is your stop?
I'm not trying to give money back. I've been in this for too long anyway, so it's super tight. If this little coil breaks lower, goodbye into that gap. See ya. I'm done.
I have a question for
What?
you. How do you feel about my 50-day moving average thesis for the current market environment specifically? I'm not a moving average guy, but I really like focusing on stocks that are above their 50-day moving average right now.
Yeah.
Am I getting too cute, or you think that's a good pond to
I
fish in?
think you could do it in other ways. I like stocks that are above their August 2022 highs or whatever their base breakout level was. But yes, it's good to have a rule or have some line in the sand if you want to use a moving average. That's cool.
Well, it's not a general rule. It's a guideline for the current environment. Just this environment, because I've seen so many of the stronger names holding above their 50-day while the weaker ones have broken below it. I just think in this particular environment, that's a helpful filter. That's all.
Yeah.
Yeah?
I think it's fine. Yeah, I like to make sure that I'm above a rising 20-day when I enter something.
Do you? Always?
Not always. Brian Shannon will tell you the 5-day. He's got a shorter time frame.
I'm aware. We got to have Brian Shannon back on the show.
He was just on like a
and
month
then-
ago.
Spencer, I know you're dying to talk about emerging market currencies, so go ahead and throw that chart that you love so much, the Mexican peso. Look at that reversal yesterday. Can we talk about that key reversal? Is that just a blip, or is the Mexican peso now on the rise?
Why don't you define key reversal? We've never defined it on this show.
Well, there's no real hard rule of what a key reversal is, but nevertheless, the Japanese would call something like this a hammer, because they say that the market is hammering in a bottom, right? When you see candles like this, it doesn't mean anything until you get follow through in the next period, right? So this is a potential hammer. This is a potential key reversal, and I guess my definition here would be you get a massive sell-off intraday that completely reverses to go out at the highs. Right?
Yeah. I mean, Bulkowski did I think coin it, and it's a bullish engulfing that ends a short-term downtrend.
It's not a bullish engulfing. It has nothing. It's not engulfing anything. What do you mean?
This is in the CMT textbook, JC. The pattern form.
A key reversal, a hammer, has nothing to do with an engulfing. It didn't engulf anything.
Okay. I'm just telling you how they teach it. It's
Who's they?
the CMT.
I don't give a fuck what they're teaching. There's no engulfing of any kind yesterday in the Mexican peso.
you were saying key reversal, I was going to read you the definition, the textbook definition.
Oh, bullshit.
Okay.
Key reversal is an engulfing. You have an engulfing pattern is one thing. A hammer is another thing.
I get it. I hear you.
My bad.
Reversal. Engulfing pattern. No, the point is the sellers were in control. The trend had been down for the last several weeks or whatever, and the bears couldn't hold control of that trend, and the bulls completely took it over. It's a hammer. This is a textbook hammer. Textbook. Now, of course, as I mentioned before, it is a potential hammer. It is a potential key reversal because you don't get confirmation until the following period, which would be today. So let's see what happens. Now, I will say this. In my experience, there are few things as bearish as a hammer not working and a hammer not reversing, right? So if we were to melt down and break through those reversals, the bears are clearly in control. The bulls were not able to take over control, and the downtrend is even stronger than it was prior, right? How's that, Strazza? Would you agree with that?
The chat's just cracking me up. I've been golfing while being hammered. Does that count?
I don't know who this Balkowski guy is. I'm sure he loves his kids. For me, this is not an engulfing pattern. It's not engulfing anything. I'm sure he's a nice guy. I'm sure these folks at the CMT are lovely. They're big, you know, I'm a big fan of theirs. Doesn't mean we have to agree.
I was just throwing it out there, right? Because we have a lot of current and prospective CMTs that watch the show. So I was just
listen. I don't know who this Balkowski guy is, but I promise you, Mr. Balkowski is not going to call this an engulfing pattern. And if he does, tell him to come see me. Step into my office.
Why do you care so much about the Mexican peso? You going to Mexico?
I like how you did that. Bring us back home. Bring us back. I like that. Good job, Strazza. Why do I care so much about the Mexican peso? Because if you overlay the volatility index with the Mexican peso, they do the opposite.
Wow.
So if the Mexican peso is strong, volatility comes off. When the Mexican peso is selling off, that tends to happen when volatility is spiking. So if you are interested in making money in the equities market, I am one of those people. I care what volatility is doing. And therefore, I care what the good old Mexican peso is doing.
Drop it.
And that's what that means.
Drop in one of those peso VIX charts just so everyone could see this. It's remarkable.
Do we have a peso VIX chart handy?
We got
We
got them. I could pull one up. Fonz got it.
Got it.
It's truly remarkable, the relationship between these two, and no one knows why. It's probably just a risk thing.
But I just told you why. Yeah, that's right. It's a risk thing. These emerging market currencies are doing well, and volatility is probably compressed.
This is something I stumbled upon. This is why we all talk about it now. A few years ago, I was flipping through my macro chart book, and I said, holy shit, that really looks like that. I had the VIX and the Mexican peso right next to each other, overlaid them, ran the correlation. We said, holy shit. My point is, this isn't something you're going to find in John Murphy's intermarket book. You could ask Andrew Thrasher. He'll say,
What about the new one?
It ends up being an excellent signal, and it should be used, I think, exactly the way that you're using it right now to confirm. Or
you can even expand on that. The Mexican peso is like what do you call it? The benchmark emerging market currency, or at least in the conversation, right? And then so it's an emerging market currency thing, and Mexican peso is just the Apple of emerging market currencies, if you will. Hey, there he is. Look at that chart ninja. Look at all that green in that rolling correlation.
Pretty incredible.
It is, right? So Mexican peso down, volatility up. Mexican peso up, volatility down. Volatility down, stocks probably up, right? So that is why we care about the key reversal in the Mexican peso yesterday that, to be clear, was not a bullish engulfing. Mr. Blutarski. Belkowski. Sure, he's a lovely man. Is he still alive? Is he still with us?
I don't know. He's the pattern guy.
No. You seem to know a lot about this gentleman.
He's one.
Is it even a
He's the one
man?
who
Yeah,
tested
it's
all the
probably-
patterns, dude. ThepatternSite.com. You could go check all his stuff out.
The real Bukowski, the millionaire. Can we talk about Japan? Throw up slide 5.
Might as well stick with the Asian. Yeah.
Japan's almost like not Asian. Japan's
What
like
does
just
that
like
mean?
Japan's like not Asian. Japan's like more American than anything else.
For someone that lives their life by the sector classifications, that's a hot take from you.
Well, go look at a chart of the Nikkei and then overlay emerging markets and or Asia and tell me. Right?
I'm
First
just
of all,
saying, technically Japan's in Asia. That's all I'm saying.
but it's like lost in Asia. It's like it doesn't realize that it's in Asia. It trades like it's in America, right? It's a developed country. It's not like all these emerging countries over there. By the way, I don't know if you heard, but we control their army.
Well, we control lots of armies. That doesn't mean.
I don't know if you've ever been to Japan, but they treat you great.
I haven't.
You're American. You can do no wrong in Japan. No wrong.
They have these big Toyota vans that they'll Uber you around in, and it's like a movie theater. It's like a movie theater seat that you're in, a bucket seat that's way too comfortable. It's got cup holders and all this shit. And then there's TVs on the backs of the 2 front seats. So you each have your own TVs. It's really good.
Stop. Chat's trying to gaslight me into thinking Japan's not Asia. Stop it. You're not.
It's not. It really isn't. It doesn't trade like it's in Asia. It's like its own animal.
Yeah.
You know what I'm saying? It's like its own thing. I will say Japan is fantastic. Judd TV on the chat, going to Kyoto and Tokyo in February. Ping me. I'll send you some recommendations. I love both those places. I loved Japan when I first went to Tokyo, and then I would go back to Tokyo. But it wasn't until I went to Kyoto that I was like, oh, okay. Got it. This is incredible. Kyoto really stole my heart. It really is such a beautiful, special.
I'm excited for Rob Koyfman.
I'm excited too. We were actually just talking about him yesterday. By the way, I want to ask Rob. I saw that he is working on a sort of a trade journaling application for what they're doing.
Always working on something.
Which is great. I used to use this thing called Journal Squared, and I guess nobody else was using them because they don't exist anymore. Journal Squared, remember that?
Did you guys do the new iPhone update? And do you have this new journal app?
No, and no.
Somebody's playing with my phone while I'm sleeping. Then.
Oh,
there's a new.
Is Rob here yet? Is Rob here yet, or we got time for another chart?
There's a new Apple journaling app.
Hold on,
that's really cool.
Hold on.
I don't know.
No, nobody cares. Go, Lucy. What about Toyota? Can we talk about this? How come none of the other automotive companies look like this?
Yeah, you know what? I noticed that as well. That's a good question.
Honda kind of looks like it. No,
not as good though. Right?
Stellantis looks pretty damn good. No,
as good as Toyota, as Howard Lindsay would say, Toyota.
Ferrari.
You got to own the Toyota.
Ferrari looks even better. No.
Yeah. If you don't have enough Italian automotive exposure, that'll get you done.
Zoom out enough on Tesla, and it looks like Bitcoin.
It does. It absolutely does.
No, this is an industry leader, though. You zoom out on this chart, you got this beautiful base. This would be the quality name in the group, I guess.
No unions in Japan. They actually work over there.
Okay.
They crush it. They're like putting in 60 hours a week, no cigarette breaks and any of this nonsense. These lazy bastards. They don't have any of those problems.
But Toyota looks different than like Honda, for example.
Yeah, Honda doesn't look as good.
Or any of the European ones, right? Oh no, that's not true. Look at Race. Holy moly.
Yeah.
Okay.
Yeah, but what's the market cap? Think about what the difference in the market caps are. It's not even in the
Ferrari's different. Yeah. Ferrari's
62 billion. Yeah. Toyota is 260.
They're selling collectibles, not cars, so it's a little bit
True.
different.
That's true.
I like how you did that. That's a pretty good way to put it. Yeah, I
Very
like
different
that.
customer
Did
base.
anyone see that movie? I did not see it. The
No, but
Ferrari.
everybody says it's excellent.
All right. Oh, we'll have to maybe Rob saw it. He's here right now.
Me and my brother-in-law are going to the Poconos Raceway, and we're going to go race Ferraris and Lamborghinis and Porsches. I hear the Porsches by far and away the best.
Rob probably has a Ferrari. He lives in Miami.
I hear Ferraris suck. Isn't that funny? Like compared to
I'll
Porsche.
bet Benzes are the best.
Honestly, I really like the Mercedes, driving the Mercedes, because the GMC is a beast, but it's a truck. It's like it's a truck that they turn into an SUV. The Mercedes is like a machine, like a driver's machine. Like it's just different.
And it's comfortable too. It's not like a BMW where you really feel like you're in a performance vehicle. You feel like you're driving a race car sometimes in a BMW. Benz is
true.
just
That's true.
Cool, man.
Yeah, but it's not too many doohickeys. It's got too much going on. I'm not smart enough. These Germans do not mess around. I'm not smart enough to drive a Mercedes.
You need to watch like a YouTube video that explains what everything is, so you know what to touch and what not to touch.
It's very stressful. I don't know how to turn the air conditioner on. Like it's too much.
Yeah, the AMGs.
I'm bringing Rob in. Rob
Koyfman,
founder of Koyfin.
I'm gonna get my hat on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Rob Koyfman, the Ferrari of charting, right? Oh, look at this. Look who's representing.
Hey, Rob.
What's up? You're my walking advertising. I love it, Strazza.
I wear this on the golf course.
We always are, Rob. We always are.
That's awesome. How's it going, guys? I was listening to a bunch of your chat. You talked about all the interesting things before I got here. We got nothing to talk about.
Well,
talked about Japan.
All right, let's talk about how Strazza and I are coming to Miami in April. Want to take the boat out?
Ooh, that sounds fun.
You down?
Still want to give you a shout out, JC, for the best call of the decade by suggesting that I live in South Beach instead of downtown. The best call of the decade. Thank you very much.
Best call of the decade. It's a pretty good call.
You're just consistently making good calls. This was one of them. So
I was telling Rob, I was like, really? That's where you live on West Avenue? That's great. That's where I would live. He's like, yeah, you're the one who told me to live there. I'm like, I didn't think anybody would actually listen to me. No, good for you. We'll be there. Strazza and I will be there in April, and we should get some good eats. I'm hooked up with a really good chef. Maybe we do like a private omakase dinner.
That's awesome.
That sounds good. That sounds good. Rob, did I see on Twitter? First of all, Rob Koyfman, founder of our favorite charting platform. Shout out, Rob. Rob was like, well, it is a data and analytics platform, JC, just because you only use the charts. There's so many other good stuff. Are you working on a journal, like a journaling thing?
We call ourselves an AI platform now just to get a higher value. We want to be NVIDIA. We don't want to be Intel. So
listen, as a shareholder, I encourage you to boost up that valuation as much as possible. Call yourselves whatever the hell you need to. Let's make some money. No, seriously. Is there like a journaling application that you guys are doing?
It's not journaling as much. Well, it's a portfolio analytics application. So it's a way for you to manage portfolios. One is just the ability to kind of have all your positions, have your cost basis, your lots, understand what your exposure is, attribution, risk, stuff like that. In the future, we want to add more things like hooking up to your broker. We want to have kind of like historical P&L analysis.
I was going to ask you if you're going to do that. It seems pretty easy to do that because you could use is it not Zelle?
Just Plaid and Yodlee.
Plaid, that's it. See,
yeah.
I know.
Yeah,
Plaid,
you know the general ballpark. It's actually not that easy. So it's easy to hook it up, but there's just so many exceptions, and you.
I know, but Rob, you're so good at this, though. You got this. You can do it.
It just it'll require like a lot of manual, constant updates. Like they give you positions that the tickers aren't correct, and there's like a dot or a slash, and so it just because every broker treats it a little bit differently. So that's why in the first iteration we're just like, all right, it kind of sucks, but you just have to upload a CSV or input it, not hooked up to your brokerage. And then later on, we'll figure out how to hook it up to your brokerage. So
Talk to me about the earnings tools. I use the earnings calendar.
yeah, we have a we have a webinar today on how to use earnings tools. So I will we'll add.
You have a link? You have a link we could drop in
Yeah,
the
we'll
chat?
definitely give you a link that you can drop in the chat.
I already have it.
Right here.
Oh,
Look
nice.
at
And then
that.
to make sure you tweet it out. Are you going to
We're
record
going
it?
to record it. If you sign up to the webinar, we'll send you the replay as well. And we post most of our stuff on YouTube as well. If you follow us on YouTube, we'll have that as well. But yeah, the earnings calendar, really nice to be able to just kind of like see who's reporting, what the expectations are, and see historically who beat, miss, and have that nicely filtered by your watch list or by an ETF, or by an index, however you like to slice and dice it.
If you guys aren't using Koyfin, your life has gone horribly wrong. Like, seriously. Like, what is the matter with you people who don't use Koyfin? Like, for real. Like, it really is such a great platform. So kudos to you, Rob. I'm interested in the analyst, as usual. I feel like we always come back to this. I'm interested in the analyst ratings because what we want to do is that we want to filter the companies that have 2 or fewer analyst coverage and sort them by proximity to the new highs, all-time highs, right?
Yeah,
Strazza,
I messed
probably?
something up. I was going to email you today. I tried to add all the columns together to get a total number of analysts, but I don't think I'm doing it right.
No, we have it. I could share my screen to show you how to do that.
Let's do it.
Quick.
Let's do it. Hell yeah. Good. Now we don't have to talk to you later.
Wrong. I did like one of those manual formulas, Rob, and I'm adding like the 5 columns, the buy rate.
I mean, you should just stick to golf, man, not technology. That's the bottom line.
So much new stuff.
No, he does not need to play. Have you ever seen him play golf? It is not.
Phil Perlman said, "Play more golf." I said, "Fine."
Oh, and Perlman also says a lot of things that we don't do.
Some things we do.
So here's what we're doing, guys. We are interested in a lot of things that Koyfin has. Strazza and I, in particular, were having a conversation yesterday that was inspired by a friend of ours named Eddie Elfenbein. If you guys are familiar, yeah, he was on the show earlier this week, and Eddie specifically likes stocks that are undercovered. Because if they don't need coverage, a lot of the times the reason is because they got plenty of money and they don't need those investment bankers. So it's a really interesting set of stocks that have no analyst coverage, particularly the ones doing really well. They tend to be down lower on the cap scale, which is perfectly fine. So Rob is going to show us how to do this correctly because our human made errors.
So in Koyfin, you have a lot of different kind of widgets over here. Someone just asked on the chat. I just want to touch on this briefly. How's Koyfin different than TradingView? TradingView, great platform, very focused on technical analysis and prices. If you're into that sort of thing, which I am and you guys are, and a lot of investors should be. But Koyfin also has, so we do have kind of like the technical analysis, but we also have the fundamentals and the macro. And that's kind of like where we come in is giving you that ability to really dig into the fundamentals, the valuations, a little bit more. So, some people just don't do that at all. They just stick to technicals. If you are into looking at more macro, more fundamentals, we have that covered, and we're really good at that. And then our functionality is a little bit different. Just some people, TradingView, I think is excellent at charting. And then some of the other stuff, I think we have a different perspective on kind of how to handle screening tools and dashboards and watch lists and stuff like that. So it's a little bit of a user interface and how to link all those together. So that's the quick kind of pitch or overview on Koyfin versus TradingView. But right here in my screens is where the screener is. If you hit this plus button over here, you get a new screen. We have some presets here for you that you can look through, but I'm going to go from scratch. I'm under stocks here. We're screening for stocks. This is kind of like your region. So our region is right now US and Canada. Where do you guys want to do Canadian stocks or just US?
I want to do Earth.
Really?
Yes.
So no trading. No trading region.
Can you do US without Canada though, Rob?
Yeah. So region is US and Canada, and then country is US. Yeah. So Earth, no filters. So 55,000 primary securities on.
Why don't we just use the United States? Let's filter that down a little bit more.
Yeah, it'll be
Good
a
call,
little
Rob.
easier. So US. So we get 8,000, 8,500 matches. You guys want a market cap filter or no?
Billion.
Always.
1 billion.
Always.
Billion's going to be hard because, well, just because we're doing a non-covered. Well, let's do 500 million. How about that?
500. Why don't we do 500?
Why you think it won't return enough? If
I mean,
if
we could try.
Yeah, it's 2,400
no.
matches.
Once we say like no analysts
Oh, yeah,
cover
true.
it, right? Because that's what. So
True.
once we go here and we go to analyst estimates and we say ratings, and then we say number of where is it? Sorry, it's
Average analyst ratings, 1 through 5.
it's price targets.
Oh.
So it's the number of price targets. So we actually don't have it in ratings. We have it in targets. You have to do it there.
Got it.
That's where I messed up, Rob.
Got it.
That's where I messed
Yeah.
up.
So the other thing that we don't have right now, which is a big oversight, but just the way our database is structured, which kind of sucks. Zeros are considered blanks, so you can only filter for numbers. You can't filter for zeros, which kind of sucks. So apologies for that. We'll fix that. But you want between 1 and 2.
Yes.
So it's kind of like still do that. Let's see how many fit the bill, and then you want it.
Well, if we just get all analyst coverages, can't we just then sort by number?
Yeah. Well, yeah. So you could do that. So you could do that. So you can.
So just get all of them and then just sort.
So you could sort exactly. So let's do that the other way also. But so you get 187 now with 500 million and above, one or two analysts covering it, and then you wanted to do within 52-week high, right? So we go to price and performance.
All time, preferably. But yeah.
Below 52-week high, adjusted, right? Just kidding.
Hey, now stop it with that.
Actually,
nonsense.
it doesn't matter, I guess, if it's within its high, because it's not going to be adjusted historically. But we'll just do this. Percentage below 52-week high, we're gonna get it's kind of like minus 67% to kind of like minus 0.32. So let's do within 5%. What do you think?
Yes, that's good.
And then 0. So we have 16 matches here. So this is low analyst, 52-week high. Let's see who these guys are.
Those are between 1 and 2 analysts covering it within 5% of new 52-week highs.
Yep.
Look at these names: Morningstar, MCore. Look at Alpha Metallurgical, Strazza. Perfect example of why we do this.
Diebold.
So what?
They make ATM machines.
So what I can do now here is I can actually save this as a watch list. This is my screen result, and now I can go to my lots of charts, which gives me lots of charts, and load that watch list in. So I might.
That's very clever.
Let's watch this, and now you can see kind of like how just what these companies look like on a 10-year basis. So obviously we're looking for the 52-week high, so they're all going to be within the 52-week high. But if you want to see kind of how they look on a 5-year basis or something like that, you could sort of quickly see like this one would be really interesting to me, right? Kind of like doing a very long base and now just breaking out. We don't have the company names here, which doesn't fit.
I like the list.
You like the list better? You don't like. Oh yeah, you don't like charts. I heard that about you. Joke.
Yeah, no, I like this. I like the sort, and then we can go look at the charts afterwards. For me.
So this is kind of like how you would narrow down the list, and then I think JC, what you suggested was getting a list of.
Because I mean, the idea. I mean, we could do this later on, but yes, the idea would be to get the zeros because I really like the zeros. 1s and 2s are fine. Clearly, it doesn't add much more to the list, which is fine. But my suspicion is there's going to be adding the zeros is going to add quite a bit to that list.
So the way you would do, and so the other thing is kind of like just in the interest of speed, we only display the 2,000 results, so you might have to do it in market cap buckets. So let's say you wanted to do so country here. US
500 to 20, probably something like that.
Yeah, so 500 to let's say try 10 billion, and then so we get So this is perfect because you get 2,000 matches. You get that, We then add a column for the number of price targets. It's going to be a little.
Do you like our thought process
I
here,
love-
Rob? Is it? Do you approve? Because I know you have opinions on things that I do. On this one in particular, are you?
I love the going against the there's some measure of consensus or some measure of sentiment, and then the technicals are telling you something else. So I think you and I have talked previously about like sell rated stocks that are just like starting to break out or something, or high short interest stocks that are starting to break out. Right? Like I love.
But this includes like a fundamental filter, which I know gets you excited, right? Because think about it. If there's no analyst coverage, it's because they don't need the investment bankers for anything. That means they're doing something pretty good, probably, right? Especially if the stock's making new highs. Kind of like, our young aristocrats. These are stocks that have raised their dividends every year for 5 to 9 consecutive years. So it's like a little fundamental, because if they're able to do that, they're probably doing something right.
Yep. And here I just did kind of like what you suggested, which is just look at the column, don't screen for it, and then you have a bunch of kind of companies here that nobody covers.
Did I see this Graham Holdings on the list? It's GHC.
So this is all companies, but.
By the way, the chat thinks like this is like we're advertising Koyfin. We are not at all.
Total coincidence.
I would encourage you guys to use it. I would.
Coincidence that there was a webinar today, and then Rob is on the show.
Yeah. It really is.
This is great because Rob is doing my work that I was planning to do after the morning show.
Yeah.
Live on the morning.
We're
show.
actually doing this. Yeah. This is real life right here, guys. This is not a commercial.
Yeah. So Grayscale's on here, which isn't like really a stock, but you have some $5 billion companies here that nobody covers. So you could sort of, go through and kind of bucket it that way, and get the
love
coverage.
This. It's so good.
And also advertising, you only advertise stuff that you believe in and that you use. So
there we go.
That's not.
This is true. But this isn't even that. Like we just want to figure this out because Strazza keeps screwing it up. So,
So anyway, that Graham Holdings chart, I have it if you want to throw it up quick, Fonz. But AMR being on that list is such a good example of exactly what we're looking for, right, JC?
Exactly.
This company has no analyst coverage. Why? We've talked about, why the stock has risen so much over the past few years. They're buying back stock. Literally, it's going to be a case study one day. They bought back like a third of their flow over the past 2 years. They don't need the money. They clearly have plenty of it. Analysts are so uninterested in what they're doing.
Yep.
That's what we want.
That's what we want. That's what we're looking for.
So I would take the other side of this sometimes and say,
good.
Of course you would.
We know.
No, listen. But when a stock does not have coverage, it also means they don't have defenders, public defenders, right? So I remember Josh Brown talking about this a lot. Remember there was this wave of direct listings a few years ago. Slack direct listed, Spotify direct listed. When you direct list and you go public without raising any money, you don't get the coverage with that, and then you lose institutional defenders, people who are willing to go
right.
So
it's even worse. They don't support your stock. The underwriters will support your stock.
Hold on. So to your point, Spencer, you're 100% right. So if the stock is still making new 52-week highs despite all that, something good is happening, which is our point. Okay. So you're right. Well, with you. So think about just how good a company's doing, or how well a company's doing if it's behaving that way despite all the things you just said, right?
They don't need the defense.
Well,
they don't need your defense.
Some of them do, right? And they don't have.
Yeah, we're ignoring those.
It's from kind of like the way I look at it, it's less from defense and more of liquidity. And if a stock is going up, that means they're doing something right. That means the market cap is going to be increasing it. That means that there's probably going to be at some point people covering it, and you're getting in before that. And so at some point for the stock to continue to go up, like you're probably not going to have a $30 or $50 billion stock that isn't covered, right? Because if they're doing something right, then at some point Wall Street will be interested in trying to sell them debt and equity and coverage and all that other stuff. So
it's similar, Rob, to what you were just explaining about betting on stocks that are being bet against by the analyst community. Mm-hmm. All we're doing is front running future upgrades and future, price target
initiations of coverage.
So
By that time, it's too late.
Yeah. So I guess I guess like what Spencer's saying, like you just might not have the liquidity right now, like a different screen, which might capture that is just forget about the stock coverage. Let's focus just on sell side or high interest, because that'll give you just a different measure of sentiment, and the stock could be very liquid.
I like when they initiate coverage with a hold. Hold what, bro? You just
The whole analyst rating things are still
oh, the good old sell side. If you want to chuckle, go see what those guys are up to. It was always good for a laugh. Rob, I feel like every time we have this conversation, it all comes back to the analyst ratings, and a lot of it has to do is because we're really interested in, and you just happen to be really good at that. I think it's just like a data set that's harder to find out there. So you do a really good job with that. So I hate to every time you're on, we keep coming back to it. What do you want to show off that is not the analyst coverage sort of data that you think is really, really cool and valuable?
No, look, I think the screening tool is very cool. The other thing that we recently introduced is valuation measures for ETFs. I know, again, goes back to the fundamentals, but if you wanted to look at like the Mexican ETF and the valuation over time, you could actually see how expensive it is, where it fits in versus SPY or something like that. So just giving another.
These are multiples to earnings. Is that what you're referring to?
PE, EV to sales, EV to EBITDA, kind of like all the high level multiples. We have kind of like all those ETFs, and you could graph them over time, so you could actually see, in what I found interesting in October when you were getting so bulled up on small cap, the multiple of small cap was at its low, right? Because like people hated it, the valuation was super depressed.
That's why I was buying them.
Yeah, you
actually.
did. You actually did a DCF, I think, for all the companies, didn't you? Yeah.
Is that like a DTF?
Jason doesn't know what that means. As evidence exhibit A right there.
It's very cool to be able to chart technical data point, typically price, and then right below it, put a fundamental data point like price to earnings. I do that all the time. It's nice to have, that functionality. We can't do that in our other platforms.
Yep.
Yeah.
So anyway,
anchored VWAP. We're getting questions on the chat.
Anchored VWAP still, despite Brian's persistence, we still don't have it. We will have it one day.
You can be very persistent, Brian
And I love the framework. It's great. It just we small team just have a lot of stuff to do, and unfortunately, that's still kind of like on the to-do list.
That's all right. It's a good one. It's a good one on the to-do list. The anchored VWAP. What about I really, really like the foreign currencies. I really like the foreign yields. So be able to look at yield curves in Canada and Australia. Look at 10s, different countries. Especially, we keep everyone's talking about the US 10-year yield. Where's the US 10-year yield going? You know the answer to where the US 10-year yield is going? Look at the yields out in Europe.
Yeah.
The US 10-year is going to follow what they're doing, right? So, these yields it's not easy data to find out there on the old internets. Koyfin does a really good job. So if you're looking for those foreign yields, so if you're interested in what the US bond market is going to do, go to Koyfin and look at what European yields are doing.
They also organize them in dashboards that, the visual graphics are very easy to understand. I like to use the international watch list, and you could see you could assess market internals around the world in 2 seconds. You could use the local, you could use US dollar, the ETFs, and just see, is there a lot of green? Is there a lot of red? How are stocks doing today? Really easily.
You're not in New York next week by any chance, are you?
I'm not, no.
Do you want to be?
I love how you had to think about it.
I just
am I in New York next week?
Man, I just came back from Tulum for the long weekend with my wife in Mexico, and that place is just magical. Great. So that's why
you take
no childless.
Wow,
it's great.
So that's a real vacation, because when you take the kids, it's a trip. It's not a vacation.
Rob was buying pesos last week.
I was the prices in Tulum are literally Miami, New York prices. Everything. It's
really
insane.
Is it because it's all people from Miami and New York?
It's people from like Paris and Punta del Este and stuff like that. But
you're so fancy, Rob.
It was the first fancy vacation we've taken in a while. It's great.
Bougie McBouge over here.
Rob, where's your favorite place to eat on South Beach?
Good question.
I think
You can give a few.
I think it depends on the food, but macchiolina for Italian food is
it so good?
is fantastic. I need to try the Italian place that you suggested on Espanola. Forget.
Macchiolina is the one at the nice hotel with the red stuff.
No, Macchiolina is on Alton Road, and like 7th or 8th.
Okay.
Do you ever go to Brickell, or you just stay on the beach?
Stay on the beach. There's a restaurant called Tam Tam that opened up in downtown. That's right now my favorite restaurant in Miami. They do street Vietnamese food, so everything's kind of like really spicy and it reminds me of a Brooklyn place, but the food is just fantastic. So that's a good place.
Amazing. Love this. Love this. I love how now I go to Rob for food recommendations in Miami. I'm so out of the game, dude. I left 25 years ago. I don't know what's going on now.
In April, let's do it.
For sure. 100%. If I can't get my chef, then we'll go to one of these restaurants.
Cool.
Rob, have you ever been to Vita Osteria?
I have not, no.
Really Rob, what is your end of year S&P target?
Jesus Christ. All right.
Whatever 10% higher is.
Oh,
Rob, exactly.
Wow, I like that. Okay.
Yeah.
All right.
Exactly how much
top out. You would make a great sell side strategist.
I have a hold on the S&P, 10% upside.
There you go.
How's that? Pay me $4 million.
All right. Rob Koyfman, founder of Koyfin. I did drop the link to their webinar later on today. It's in the chat, multiple places. Check it out there. Rob, thanks a lot, man.
Always a pleasure. Thanks, guys. Bye.
All right.
Dude, that was fucking awesome.
By the way,
we needed that. By the way,
now I can go golfing today.
Now you can go golfing today because
what I want to say is we do these pretty earnings graphics every week during earnings season, and where do you think we get our data from?
Koyfin, why don't we give them a shout out then?
Well, because I like to double check always good to double triple check with what.
Let's give them some love. Put data brought to us by Koyfin.
Koyfin's the primary source, so
give them some love. Give them some love on these screenshots in the future. It's the right thing to do, whether we were friends with Rob or not. It's the right thing to do.
You don't need to fact check Rob's data.
Earnings can be tricky.
They can be tricky. Spencer's right.
Tricky.
I've said Spencer's right twice this episode.
A lot of people don't know this about earnings, but there is no earnings date. They're all guesses and estimates. They tend to be really good, but like Key Corp was supposed to come out after the bell. It came out before.
Well, that's why when in doubt, you go to the IR page, which I do quite frequently.
Nerd alert.
They don't.
You know what's really cool?
They don't have to tell you, Spencer.
In the old days, back in the day,
the IR page,
15 years ago, Google used to always report the night before options expiration. This is way back in the day before weeklies and all kinds of zero DTE stuff. So earnings would expire on Friday and they'd report on the Thursday night before. And it would drive options traders so crazy, myself included for the record. If I were a CEO of a company like that, I would do that just to screw with traders too, just for fun.
I remember a time when Google accidentally released their earnings in the middle of a session. You guys remember that?
That wasn't that long ago, right?
Do I remember?
Might have been like 10 years.
I don't think I remember that.
Oh yeah, it was the whole thing.
Oh, that's not good.
So somebody hit the wrong button.
It's like the SEC the other day when they accidentally approved the Bitcoin ETF, and they're like, "Oh, pay no attention to the man behind the curtain."
Right. The Google also every day new layoffs. So
Good.
AI is expensive, man.
Good. Put long.
AI, okay. There's two things.
Fire them all.
AI is expensive. AI is also reducing headcount. Okay, let's be real about this. AI is probably working for them if they're laying off people like across every department. These guys,
AI is just going to bring more job opportunities, just like every other technology in history.
These companies are going to be so lean and mean after their hiring sprees and now their firing sprees over the past 2 years. I mean, these companies are just going to be scary good.
What's the first $5 trillion stock?
And you know what? $5 trillion. It's probably going to be Microsoft. Probably going to be Microsoft.
And what about the first $10 trillion stock?
Maybe Nvidia at this point. We'll have to wait and see. Maybe
that's a different question, right? 5 trillion or 10, a different question.
I don't see how Microsoft really gets to 10.
I couldn't see how they got to 3. I mean, that's
You could look back, and Nvidia could be the biggest one.
how many years until our first $10 trillion stock? How many years?
10?
Well, it's
That
gonna be a
long?
while.
10 years?
It's only a triple for a couple of these stocks.
It's not happening this cycle, that's for sure.
It's
Okay,
not
no
happening this
shot.
cycle, but this cycle we'll see
How
a
long?
5.
How long did it take to go from like 1 to
Probably
1 to 2 and 2 to 3?
1 to 2 didn't take very long at all.
fast. Happened
Fast.
really fast.
Yup.
Yeah.
Hard to say. I would not count out Nvidia. I think Google has to be in that conversation as well. I don't think Amazon does it. I don't see how they get there. I don't think Apple does it. It would have to be something huge in healthcare or something we don't know about right now.
Yeah, a healthcare stock coming out of nowhere.
No. He's saying for Apple, it would have to be
Apple. For Apple.
health-
Apple would have to do something in healthcare to get to 10 trillion.
Yeah, that's probably not too far off. Yeah, you're probably
not.
right. And they probably
they're
Google or Microsoft, I could see just kind of owning AI and getting there that way. And
they
then
certainly seem to be. Like, people ask me all the time, JC, how are you playing this AI thing? Google, Microsoft, Nvidia.
the
Like,
same way we've been playing it since literally this time last year. And we talked all about it. We talked about it on here. And I remember having this conversation with you where it was a big question. The first quarter, second quarter of last year, all anybody wanted to ask me was, how do I invest in AI? And I would tell everyone over
even
and
your
over.
friends in Key West were asking you
Yes,
that.
we were golfing. I said, you buy the biggest ones, buy the mega cap tech stocks. They're going to dominate. Buy Microsoft, Apple. And people hated that answer. They wanted to hear C3 AI or some penny stock. They hated hearing it's the same ones. And I was like, oh God, this
It's
is
definitely going to work. And they did. And no, you may bring up a great point, because I remember having this exact conversation a year ago, because the OpenAI got hot in Q4 of 22, right?
Yep.
Okay, let's do a quick rundown here. Dow futures are down 75 points, while the NASDAQ futures are up a full percent. S&P futures up almost 20 handles, about 35 basis points. Bond futures are flat, gold flat, silver flat, copper flat, oil flat. Dollar a little bit mixed here, with the volatility index down towards 14 again. Knocked that down real quick. Nice that we sold some premium yesterday, one for the good guys. I'm looking forward to talking to Sean about this. We put on an iron condor in Tesla yesterday, making the bet that the Tesla is arguably the biggest mess in the market, and our bet is going to stay messy a little longer.
Look, Tesla's history as a public company is basically 2.5 years of like the most insane growth you'll ever see ever, and then everything else is just range bound. That's what it's been done. That's just what it does. It was range bound for like 8 years until like one.
So our bet is that it does what Spencer's saying.
Yeah, it was
For another few weeks. Sean thinks we're going to be taking profits by the end of next
all
week.
right. That's early.
And what? Tesla?
Tesla?
Listen, the DraftKings trade you might not even be able to put on at this point.
We put it on already.
I don't think so.
What do you mean you don't think so? Oh, well, it was in we discussed it in the meeting. So for those lucky few in our portfolio accelerator, they got the trade.
Let's do some more stocks here.
That was a very unique trade.
I bought weekly calls. It was just quick runner.
You paid for them naked?
Hell yeah. I'll be selling today probably.
I really liked financing that trade. I really liked that.
And I'll want to roll them into something further.
What'd you pay? You paid like 3 something.
I paid up, dude. I paid like
You paid $1.50. $1.50
40
net.
50 for the weekly 36s. They're expensive.
We got $1.50 for the 40s.
I didn't sell anything.
I know, we did.
Good.
Is this?
I'm surprised you did it and paid that much money.
Different strokes for different folks.
Is this a
just saying,
a pre Super Bowl
It's very
trade? Is that what this is? The Super Bowl run up?
Pre-Super Bowl trade?
No, this is so stupid. Don't listen to Jim Cramer. I ran the seasonality. Fonz, let's talk about the seasonality.
That was only half.
Buffalo Wild Wings is the Super Bowl trade.
BWLD, RIP.
I mean,
Oh, it doesn't exist anymore? What happened?
No, private equity.
Kramer did a whole.
What?
What?
It got bought years ago.
By who?
Buffalo Wild Wings?
Yeah, I think Jab, the same guys that bought Panera, maybe. Don't quote. I don't know. Don't quote.
Yeah, those Brazilian guys. They buy all the fast food
Yeah, I
joints.
don't know.
They're private
Yeah.
equity. Buffalo Wild Wings sucks.
Wait, Steve, what were you saying?
These are terrible wings.
So we got the Kramer
Don't go.
pump on the DraftKings, which I wasn't expecting, but hey, take any catalyst you're going to get. That's probably can explain some of this price action over the past 2 days. I agree with everything he said. You could go watch the clip. It's like 5 minutes. I agree with everything he said. He lays out his whole bull thesis.
Jim Cramer?
Yeah, for DraftKings. You know, it basically rests on the simple fact that they are now the winner in the space. And he was calling it, you know, something similar to Uber or Pinterest. It's just going to be a winner take all market, right? So these companies pushed so hard to be the first mover and to grab all the eyeballs and get all the customers and just get them into their world, right? So they're spending like crazy on marketing. That push is over. DraftKings replaced FanDuel as number one last year. They turned profitable, at least just for 1 quarter last year. Now they're going to trim their expense lines, right? And cut costs, stop doing all that marketing.
Who owns FanDuel?
It's called Flutter. They're over the counter. They are public. The ticker is very long and complicated. It's PDYPY. PDY.
Point is, the marketing.
Flutter Entertainment. Yeah. It's an ADR. Where are these guys
located?
The point is, just based on the life cycle of these businesses, the big marketing spends have been made, right? They are now where they are at the top of the mountain, and now they're going to cut costs. Their margins are going to blow up, and they're going to turn not just profitable, but very profitable next year. I think 400 million EBITDA estimate. So this company's about to make some real money, and we're not even talking about being in the 4 biggest states yet. He talked about, I think he focused on California and New York. He said Florida's a weird one because there's Native American stuff, the Seminole tribe, very powerful. They have all the rights to the sports betting here. I don't know. I think it's a big question mark if they ever do get Florida. Holy cow. But it's just nothing but like catalyst when you look out for this company. He also had a whole thing about how this is the time to buy, you know, the postseason in the NFL playoffs. And it is. Listen, there's a huge push. And these two industry groups are in bed because think about it. The media companies, you know, we were talking about yesterday with Sean. If you're wondering why there are so many commercials and ads for these sports betting apps on the networks that are advertising the games that you could bet on, it's because if it's a blowout in the 3rd and 4th quarter, they don't want you to change the channel. They want you to have money on the line and some sort of, you know, spread that matters, and you're still watching in the 4th quarter. They both win. So huge push, huge effort there. The marketing, you're going to see a lot less commercials in the future, and you're going to see higher net profits. So I think that's awesome. I don't think that the NFL playoffs is a reason to buy the stock. I wouldn't just trade
playoffs
to the Super Bowl. Throw up the seasonality. We did the work. He's not lying. Is there something there in January and February? Sure. I mean, the Super Bowl's over, what, February 10th, 11th?
Yeah.
Throw up the
They're still playing it this year?
Yeah, it's in Vegas, right?
It's supposed to be the biggest night ever in Vegas, like more than any Mayweather fights. Like it's supposed to be the biggest night ever.
So sure, January and February are great, but what explains May? There's no
that's
NFL
easy. That's easy. That's the Kentucky Derby, man.
Who gambles on
Kentucky Derby? What about the Masters? Isn't the Masters right around there too?
April.
I will never watch a Kentucky Derby.
Why?
Because you're from Connecticut.
Terrible.
You're not from Baltimore. You're not from
man.
You know, Kentucky. You're not from Long Island. You're from Connecticut. You guys do those pools with the golfers where you know you select different golfers for like random tournaments no one's ever heard of.
Steve, I would tell you running circles.
I will tell you
all over the place.
I will tell you. 2 years ago, I went to Churchill Downs.
You say running circles, shitting all over the place.
2 years ago, I went to Churchill Downs. I thought I was going to be bored out of my mind. We were there for like 4 hours. We took a tour. It was amazing. Okay. CHDN doesn't look that good. Anyway,
go to Saratoga Springs in August. That's a lot of fun, Strazza. It's really
I grew up in a bit of a horse racing family. They used to go to the Meadowlands racetrack like every weekend. My grandpa and my uncle would be there. My uncle had a horse.
Meadowlands
look up Buttless Bunny. It was like a famous winning horse.
The Meadowlands is lovely this time of year,
I think.
All right.
It doesn't smell or anything.
Anyway, Sean's going to come on. in a couple minutes. I want to talk about Birkenstock real fast. They just
That's not for me either. Another
They
thing
just
that's not for me.
crushed it. They just crushed it. Check this out.
Yeah, why are you hating?
Birkenstock's earnings per share 14 cents versus 8 cents. Sales of $407 million versus a $303 million estimate. They beat their estimate by $100 million. Top line growth guidance of 17.
What's the ticker symbol again?
BIRK. Revenue growth of 17% year over year. And
The stock's down 6%.
yeah, well, I'm just telling you what the numbers were. I mean,
So clearly,
Yeah,
everything you're
it's gone
saying,
straight, it's
nobody
gone
is
straight up,
surprised about.
straight up in the last 10 minutes.
So this is the oldest. This is the oldest public company in America. Is that right?
No,
What?
no,
I think it
no,
is.
no. The Bank of New York.
Might be.
It's a bank in
It
New
might
York.
be.
I think this is the
They've-
oldest public company in.
They've
Yeah.
been around for it's up there, I think.
No.
Founded in 1774.
I think you're right, Jason.
Ooh, that's older than this
I think the
country.
Bank of New York is first, but all right.
Check my math.
They call it Boney.
Wow, 1774. That's crazy.
Boney.
dude.
Yeah.
Boney.
There were
Bank of New
there were
York.
5 securities traded on the New York Stock Exchange in the inaugural class. Bank of New York was one of them. I don't think Birkenstock was.
Okay, but that doesn't mean that Bank of New York existed.
Listen, the shoes are ugly. Okay. And
For the
Hey, what's the
record,
chart?
Bank of New York was
What's the chart?
founded. For the record, the Bank of New York was founded in 1784,
All right.
which was a decade after Birkenstock. Thank you very much.
wait, Birkenstock came first?
Yes, sir. 10 years earlier.
Dude, that's because Birkenstocks are timeless, man.
Dude, didn't they make their money on Jerusalem cruisers? They've been around
The
forever.
Jesus flippers. Yeah.
Yeah,
What? Look at them.
That's what they are. That's what they are.
they've been around.
Wait, do we have a
They've been
chart? I thought
around.
we did. I guess not. Okay.
Jesus Christ was the spokesman.
Wrote about
right?
Birkenstocks in the Bible.
All right. And then other news here. Humana lowered guidance this morning. So HUM is, if you're wondering why are health insurance stocks all down, it's Humana.
You know, JC, I just got a chuckle. I saw it came across the wire here, and this one won't be included, but another $20,000 purchase from a Tilray executive today.
Dude, what are these people doing, man?
Woo. All right.
Dude, what an embarrassment.
This is good. Any other earnings stuff, Spencer? I feel like we didn't. Did
Well,
you?
yeah. I mean, there's a few. We didn't talk about Key Corp. We didn't talk about Alcoa, Kinder Morgan, Discover, Fastenal. Where do you want to go?
Give me the Key Corp and the Fastenal.
Yeah, go for it.
All right. Key Corp. You're in this one, right, Steve? You're still?
Yeah.
Yeah. Okay. Just checking. All right. Key Corp. The EPS missed 3 cents versus 8 cents. Revenue in line, slight beat, 1.54 versus 1.53 billion dollars. I have not looked at the stock this morning. I'm assuming it's down because that's what the banks have been doing. But let's
Down 2%.
yeah. Do we have a chart? What's that? What's that?
We should have a chart. You know, we talked about how this little coil could easily resolve lower and result in a simple retest of the base breakout level at those old pivot highs. It won't work for me and the way that I traded it, that won't matter. But if you're in the common or longer dated calls, that's also a fine entry, right? Like the base is still completed. This is just a retest and go. I don't hate it here. I just picked the wrong time frame. Do we not have a chart?
I'm sure we had one somewhere.
Draw it in the air. So we went boom, and we coiled. We went like this. And now we're going down, but there's a base here.
Okay.
Can we
No chart.
can we go to the hot corner?
And well,
There's
yeah.
not much going on,
Bring
but
it
I know
on.
you want to talk about Mr. Warren Buffett.
I mean, I do want to talk about Mr. Warren Buffett, but I also want to talk about this $53 billion Form 4 on PBF Energy. These refining stocks, if there's anything in oil and gas that's doing well, it's these.
Speaking of energy, Peabody coal will be represented in the S&P indexes for the first time in at least my career, I think. So Peabody just got added to the S&P 6.
Yeah.
Elf got moved to the S&P 4, and then some real estate company went somewhere.
Elf is now a mid cap. All right, hot corner.
Because line go up.
Hot corner.
Hot corner. So hot right now.
LSXMK.
That's Liberty. That's what the whole that's it's a conglomerate, man. It's a cable network, but there's also some Formula One in there. It's very confusing. I'm not quite.
There's like 18 of these stocks.
Yeah.
This is the Malone.
Right. John Malone. Yep.
They say he's like Warren Buffett.
And they own Sirius Satellite too?
Well,
they own a ton.
Yes
of
and no. I mean, Sirius is.
They don't outright own Sirius XM. That's its own stock.
Right.
So there's something going on.
Well, the name of the company is Liberty Media Corp. Liberty Sirius XM.
It's a broadcasting conglomerate.
I understand.
Yep.
So Uncle Warren likes it. How much did he buy?
Chart looks like crap.
Chart looks like shit.
80 million combined. 84.
So hold on, Strazza. So those two different Form 4 filings, a 48 and a 36. So he bought $85 million worth, basically?
They're different tickers. Yeah. They're different securities.
Oh, they're
altogether.
different tickers.
Yeah.
Oh, yeah, they are.
Yeah.
What's the difference, Spencer? Seems like something random you would know.
It's a class of stock situation.
Classes. It's not.
Yeah.
Like Google with an L and Google without an L?
This is probably the most confusing public corporate structure in the U.S. stock market.
Just because what ends up happening is that it's confusing, it's complicated, and then they do a deal, and it gets even more complicated.
Yeah.
And then one of those deals does another deal, and just the shit show just gets worse, and right?
Yeah, it's a mess. So I don't know. I'm not going to know the answers to your questions. I'm just telling you that right off the bat. What I do know, though, is that neither of these are new positions. They're simply adding. They're not too large yet, but they already own a combined about $2 billion of these two stocks since
$2 billion. So another 84 million, no big deal.
Since 2016. Yeah, so nothing new. Like, right, the reason why we made, this is probably a good lesson. The reason why we made so much noise about the Oxy purchases last year, this is a brand new position. March of last year, we started talking about, or 2 years ago now, we started talking about Oxy. We got that first filing in March of 2022.
We'll probably get another filing soon if I know Warren.
It was a brand new position, and we know Warren wasn't just coming out there to buy a couple percent worth of the stock. And then we got, they just kept coming in like every other day as the stock was running up. Interestingly enough, though, the stock pretty much peaked when Buffett started buying it. He didn't buy it at the peak, right? But it hasn't really made any progress since. He's in the green because he made some early purchases on the way up. But anyway, Opco Health, this is Dr. Philip Frost. Very familiar. He's a serial inside buyer. The stock has never been good. I've been seeing his filings hit the wire for like 10 years now. I think this is like a science lab that he just keeps financing because he's just like a super rich doctor, scientist guy, but never made any drugs. This stock is just a secular dog. And then PBF Energy, JC likes a lot. This one is from somewhere not in the U.S.
Do I like it a lot? I wouldn't say I like it a lot.
Listen, the chart's not bad. It reminds me of a lot of charts in energy. It's probably... Listen, this looks better than most.
Yeah, because of the group it's in.
Touche.
But I don't like buying things below resistance.
Yeah, sure.
Do you like buying things below resistance?
No, but this one's close.
When I was young and stupid, I used to like buying things below resistance.
Listen, you could find a lot of tops that are close to completing an energy right now. This wouldn't be one of them. I guess that's my point.
Can we bring in Sean? Because we are looking at the United States Technology Index making new all-time highs. Fun fact. You know what's not working, my friends? Consumer staples. Rolling over on a relative basis. No bid at all in consumer staples. Low volatility stocks. No love whatsoever.
Good.
They don't love the staples.
All right, Sean, coming on.
Bring them in.
Good morning, boys.
Shawnee, baby. Shawnee.
What is happening?
Nothing. We got to bring in Sean earlier.
I was wondering.
We don't
I was
have much
sitting here.
time. Spencer. It's all Spencer's fault. Sean, first of all, that DraftKings working out nicely. One for the good guys. Our boy Strazza went naked. He did not put on that put spread. So he just paid up for it.
Well, bully for you guys because I didn't get into it yet.
Told you.
Oh, well, you're not going to get into it now.
I know.
Okay. Let's talk about the trade. We did get into it. You know, JC, are you bullish or bearish? Pick one.
Who said that?
Who said that? Who talks like that?
Who said that?
People.
Huh.
I get a lot of people that throw things at me, you know. I get tomatoes constantly being thrown at me. I don't know if you guys know that.
Huh. I wish somebody would throw tomatoes my way.
Says the Italian.
Listen, one day someone will care, Strazza. One day someone will care. Don't worry. It's coming. You sit tight, buddy. You keep doing what you're doing. You'll get those tomatoes thrown at you soon enough.
Mm-hmm.
So the answer is we don't have to be bullish or bearish. In fact, I love how Sean said it. You know, what's the messiest chart? And then Strazza, somebody brought up like a lower cap messy chart. And I'm like, no. Sean wants something
Strazza
big,
said
mega
square.
cap.
And you were like, you jumped
Square.
all over.
And I was like, that's not big enough. Yeah. I'm like, we can find something messier and bigger. And then Tesla, the messiest chart on the planet, doesn't get messier.
Perfect candidate.
Find me a messier chart.
Yeah, perfect candidate.
Perfect
candidate. I came into the meeting yesterday just saying that, you know, with VIX looking at levels we haven't seen in over 2 months now. Not that VIX is super elevated by any means, but it's poking its head up higher than it's been over the last 2 months. That's not insignificant. You know, options premiums are getting a little elevated, and you know we've got earnings season coming up. That's a big part of it, certainly. And I wanted to, you know, kind of balance my portfolio a little bit by putting on some short premium delta neutral. And so I asked you guys, I'm like, hey, I need a big cap. I don't want to do an index. I don't want to do an ETF. I want a big cap. And I mean, it took about half a second for, I think, everyone to agree. Tesla is the name that's going sideways right now. And yeah, it's feels like the perfect candidate. Does that mean perfect candidates always work? No, of course not. And earnings might have something to say with that. But I like our chances here.
And I love that people are always asking me about it. And I love that people have opinions, right? Like they're either bullish or bearish. And our bet is both of them are wrong.
Well, the bet I'm making, and I heard you allude to it a little bit earlier here in the show, is that we do have earnings on deck next week for Tesla. And so when I wanted to put a delta neutral trade on here, I did not want to go naked. I did not want to have undefined risk heading into an earnings event. So we're doing an iron condor. I don't know if you guys have a chart up of what that P&L graph looks like. There it is. Beautiful. So what that shows you is the range of prices over which this trade is profitable, right? So as long as we're above 187 on the low end and below 243 on the high end, we're in that green box. That means we're going to make money.
Let me explain this in English. Very
Please
simply,
do.
very simply, we don't think this goes up or down. We think the mess continues. So we want to sell out of the money calls that people without any patience are paying a lot of money for. And we want to sell out of the money puts that people without any patience are paying a lot of money for. So we will happily accept those donations. Now, because the dollar is acting funky and volatility spiking a little and we don't know what the market's going to do, we don't just want to be naked, right? We don't want to just be naked short calls and puts. So we're going to hedge that by buying further out of the money calls and puts, right? Which turns it into an iron condor versus a strangle, right? So we're collecting income, but we want to do it in a safer way. This is a high probability of success trade. It's not going to change our net worth and make a huge impact on our life. This isn't going to be a 10 or 20 bagger. This is a high probability bet, a little bit higher volatility, collect the income, but protect ourselves as well. How'd I
Very
do?
well done. Now, let me address a couple comments I just saw come through in the comments section. One guy, Judd TV, says, fellas, I think you're playing with fire. This is precisely why this trade is a good candidate for an iron condor. He's saying you're playing with fire, and the options market agrees. That's why options premiums are elevated in this stock right now. That is the edge that we are putting in our favor. We are making the bet that Tesla is probably not going to overshoot in one way or the other following earnings. There's a lot of scared money or aggressive money who are making that bet. We're taking the other side of that. Now, I'll address the part about playing with fire. We're not playing with fire because we are protecting ourselves. This is a defined risk trade. We already know the most we could lose. If you look at the bottom left of that corner, or bottom left corner of that chart, the max risk is 690. That's the absolute most. Tesla could go to zero following earnings. We know the maximum amount of money we could lose. Can a stock trader say that? No. Can a naked put or naked call seller say that? No. They could get walloped if there's a big move. So we are not playing with fire. We are putting the let's call it the scared money. We're turning that into our advantage, right? We're selling that high premium that people are paying for options. And sure, this might not work out. Of course not. That's why we've defined our risk. And hey, newsflash, probably 60%, 70% of my trades don't work out. But the ones that do more than make up for the ones that don't.
Throw the chart of Tesla back up. I was talking to our friend Phil Perlman yesterday, and he's like talking to the audience, and he's like, guys, you see this mess? Be patient. Be patient. And I'm like, yes, Phil. Our bet is that people are not going to be patient. Well, we already know that they're not patient because they're paying a ton for these calls and puts, and we're selling it to them. So exactly what Perlman was saying, be patient with this one. We are literally making the bet that people will not be. or haven't been, I should say. Right?
Yeah. Hey, another good question in the chat. One guy asks, how much does it cost to put on an options trade like this Iron Condor at Tesla? It's a good question, especially if you're new to options trading. You're not sure how this all works.
Less if you've got the Condor on.
Right. Well, if you go back to that chart again, that P&L graph where we showed where our max risk is, the 690. So multiply that times 100. That's a $690. That's on a one lot. If we did one lots, okay, the most we could lose in this trade is $690. That's the margin requirement to put this trade on. So in your brokerage account, as long as you have at least $690 in your account, you can hold this trade. You could put this on. Now, if all you have is $690 in your account,
you should probably not be doing
full loss on this thing. You're zero. But
right.
That's all. The margin requirement per one lot on this trade is $690.
Yes. One hole's talking about iron condors are risky. Everything that we do is literally putting on risk. This is one of the less riskier positions that we put on. Everything
if there were
has
no risks, there would be no profits.
That's right. Everything has risks. This is on the more conservative side. I would argue probably even too conservative, but I'm okay with that in this environment. I'm okay.
Right.
Yeah, that's an important disclaimer. Tesla, historically, after earnings release, they generally don't move the stock. Go look at their public reporting page. This company knows what they're doing. They are intentionally reducing earnings-related volatility. They do a great job communicating. You know, if they're going to come in short on orders or whatever, there's a press release for it. So there's very few surprises come earnings.
PK wants to know, go through how to trade something like this. Very simple. We're selling the 240 calls in February. We're collecting that income. We're selling the 190 puts in February. We're collecting that income. Now we're hedging that position by also buying the 250 calls in February and buying the 180 puts in February. Very simple. Easy peasy.
Right. And you should also point out that most options brokers, if you have a reputable options broker, you can do that all in one trade. It's one transaction. You put all the things together. It's one thing. You don't have to leg into each position. In fact, I would recommend you never leg into a four-legged options trade, because especially a stock like Tesla, that's a higher price stock. That thing's gonna move around, and if you try to leg in,
you're gonna be naked somewhere, and that ain't good.
Yeah, more often than not, you're gonna end up paying more for the trade or collecting less for the trade than you wanted. So in all cases, when I put an Iron Condor, like a trade like this on, it's all just one transaction. I put all the legs into my thing, hit one button, boom, goes out.
And then just talk about the profits. How do you sell them? We're taking a profit by buying it back. We're collecting $3.10. So we don't sell the position later. We're doing that now. we are buying it back. We are unwinding that position when we could do it for $1.50.
Right. So good. I'm glad you brought that up. We're not going to hold this position until February expiration. Expiration in February, I believe.
Sean
is
thinks
16th.
we'll be taking profits next week. Sean is very optimistic about this.
Well, I think there's a good chance that if the Tesla earnings turn out to be a nothing burger, if the stock doesn't really move that much, the premium in these options are going to come out of this thing pretty rapidly. And I'm looking to buy this spread back for $1.50. So I sold it yesterday for $3.10. It's trading a little bit below there right now. So it's working already, but not where we need it to be. But we're going to buy it back at $1.50. And that, some people might ask, well, why are you leaving all that money on the table if the stock's trading right in the middle of that P&L structure? Well, the less premium there's left in the trade is the less potential profit you have while you're still holding all that risk. So there's nothing magic about the 50% level, but for me, I like to take profits when I've captured 50% of the maximum profit in the trade. And earnings on Tesla come out on Wednesday. If this thing goes nowhere following earnings or has very little movement, it's a good chance we'll close this trade on Thursday or Friday. I'm not saying it's going to happen. I'm certainly not guaranteeing that, but there's a good chance. But either way, following earnings, the premiums will start coming out of these options pretty quickly. And any opportunity we get to close it down for $1.50, we'll do it, book the profit, and move on.
And Serby wants to know, why not just buy the shares? Because we're not bullish. If we thought that the stock would go up, we would buy the shares. But that's not the bet we're making. The bet we're making is that it stays sideways.
Exactly. This is a completely different trade. And also, I wrote about this in a note that went out to our free email list, guys, our options free email list. Sign up for it. Spencer put the link in there if you want. But I wrote about it earlier this week about one advantage there's many advantages that options traders have over a simple stock trader, but one very important advantage, especially in earnings season, is let's just say we were both bullish here. You bought stock in Tesla to express your bullish bet, and I just bought a call option to express my bullish bet, right? If Tesla goes up, we both win, great. The difference is if Tesla has a terrible earnings reaction, let's say the stock loses 30% overnight, and you had a stop loss, you bought Tesla at, you're long at what, 215 or whatever, and you had a stop loss at 200. Right? You had a good till cancel stop loss order working with your broker at 200. Well, if Tesla opens at 150 the day after earnings, guess where you're getting filled? You're not getting filled at 200. You're getting filled at 150. You're taking a much larger loss than you planned on taking. Nothing you can do about it. It's out of your control. Meanwhile, me, who bought a call, the most I could lose is what I paid for the call. I know that going in. Similar to this Iron Condor trade, I know that the most I could lose is 690. No matter what. So, there's the stock traders. I certainly wouldn't put a stock trade on ahead of earnings. I learned that lesson very early in my career, and those lessons stick with you.
Make sure to sign up for Sean's free newsletter. If you're interested in learning more about options, interested in kind of keeping up with what's happening with implied volatility around the market, learning little hacks, best practices. Sean is really, really good with that stuff. I've learned a lot sitting by him over all these years. So thank you, Sean. Because I sound like an expert when I talk to people about options. Little do they know. But you make me look good, Sean. I like it.
The link to
the feeling is mutual, my friend.
The link to get Sean's free email is on the screen. It's also in the chat. Check it out right there. Also, I should mention it's Thursday. Every Thursday at noon, Sean does a little video. He calls it the Options Jam Session. It's basically just Sean jamming about options.
Today it's going to be Sean gardening. We're going to be talking about gardening today.
Oh, I don't even know what that means. Okay.
Gardens in the winter.
Pulling the weeds, as Strazza said. Pulling some weeds this week.
I see.
All right.
I like it.
All right. Well, it's
All right,
Thursday, so noon for that. CRL Chart Request Live, 1 o'clock. Those of you who are members of All Star Charts Premium, I guess we'll see you in the conference call tonight. Yeah, JC?
Hell yeah. What's the over-under on how many charts tonight? Over-under. Go.
120. I don't know.
Over.
No? Okay.
120.
1 million.
We'll set the over-under at 150. Over or under, Sean?
Over.
Strazza, under.
Speaking of over, we've gone over on our time here.
I know, we gotta go.
By
Adios,
5
guys.
minutes. We got to go. Bye, everyone. Go make some money.
Longest show ever.
I can't take no loss. I don't even know what it costs.